Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. We have back again Fabian Calvo. Now, for those of you who don't know his credentials, I mean, this is a young, smart guy. His business, thenotehouse.us, handles $100 million in distressed paper and distressed real estate a year. So he's on the front lines about what's going on. Fabian Calvo, thank you for joining us today on USAWatchdog.com.
Always a pleasure, Greg. Thanks for having me on.
Well, you know, we just had the latest Case-Shiller report, and I'm looking at that saying, well, it's up 3% year over year in the 20-city index, and everybody's like, wow, we finally have hit the bottom in the real estate market, and it looks like things are going good. And I say, A, we're suppressing rates, and B, it's off by 75, it's off by still 60% or so since the top. But you have new and more interesting information than just that. And it's about how the big banks are getting in and everybody's getting in. Tell me, is that a real number? Is the real estate market really bottoming out here and we're on our way back up from here?
Yeah, I don't think we are actually at all, really. It's more, it's basically to answer that question, I think you ask yourself another question. What do you think about, for example, the stock market? Since the near collapse in 2008, now it's been teetering around 13,000. But I think most people in the know that that's high-frequency trading, a lot of tremendous amount of manipulation, the plunge protection team, if you will, that are buying futures to keep the market propped up. It's the exact same thing in housing. First off, the Case-Shiller report, yes, has the prices gone up 3%? Yeah, they have. But you have to ask yourself, why is that taking place? Well, not only is it the artificially low interest rates that Bernanke is using as a tool, even though new home sales continue to be low with 3.5% interest rates for first-time home buyers. But you also have all the big mega banks with Fannie, with Freddie. I believe they're having monthly meetings where they're keeping inventory suppressed by not foreclosing on properties. In fact, you had in September, foreclosures jumped. Over 250,000 more foreclosures went up. I mean, one of the things when you and I last spoke was record foreclosures after the election. Well, you saw foreclosures jump. There's still over 5 million homes that are either 30 days to 90 days past due that aren't even in foreclosure.
They're not going to catch up. 20 million
vacant homes. It's extraordinary. So it's all manipulation. Doesn't mean it's not a good asset class that you could potentially make money in. We're doing that, but people need to understand what the reality really is.
You said in one of your quotes was the last time was we haven't even scratched the bottom in the real estate market, and so everybody, the mainstream media is saying, well, everybody back in the pool. There are no sharks. We've reached a low. We actually are on a sustained recovery. And what do you say?
Well, we haven't scratched the bottom at all, I believe. I mean, again, commercial debt over $1 trillion, 1.4 trillion to be exact, that's coming due this year and over the next 5 years. Over 50%, I think even more than that, is totally underwater. We look at the FHA announcing that they need a new bailout of over $16 billion. They have over $1 trillion in debt that they insure. And they're blowing through the money that they get from charging these insurance rates for people who get a 3% down payment or that type of loan. So it's a continued stress overall. Again, over 5 million homes that are in some point in the foreclosure process. You factor in the inflation of people having to pay higher gas, higher food price. They can't make their mortgage payment. That's why you have this whole shadow stimulus taking place as well. The people not making their payments, Greg, are the ones that are likely fighting over a $5 waffle maker at Walmart because they have that extra money to spend, and the government knows this.
Oh, you mean they're not making their payments? You got 5 million people in some varying degrees of default, and they're like going to stay in their home until the sheriff comes, time to get out. You're talking about people like that. So all that money, that's just free living. Is that what you're talking about?
Right. I mean, yeah. I mean, take, for example, in Florida, we have a tremendous amount of homes in foreclosure in Florida. I think it's something like over 20% of homes in Florida are in foreclosure. That is a significant amount of stimulus into the economy because money that would have otherwise been allocated towards a housing payment is now going into consumer spending. So what's difficult here to gauge in any of these asset classes, probably aside from gold and silver, but even that because of the manipulation, is how much these markets are being manipulated at so many different levels. But when it comes to housing and when it comes to the Case-Shiller 3% increase, yes, the prices have gone up 3%. I see it. I see retail prices going up, but it's because the inventory is being suppressed on purpose by the big players that are not using the same methods they used back in the savings and loan scandal, which was just liquefy the debt, which is which they should do. They're not doing this time around.
So they're holding these houses off. Even in my area, I see houses empty and no real estate sign. I go to the beach in North Carolina, and I see houses empty and just a bank sign saying, yeah, it's been foreclosed, but they're not trying to sell it. So you're saying that they have lots of houses empty that they're holding off the market. They have no wish to sell at this time. They want to kind of put them on slowly to keep the prices up. Is that what you're saying?
Yeah, absolutely. Now, not only is it over 5 million that are not making payments, over 20 million homes on any given night in America are completely sitting vacant. Okay, so it's an extraordinary number.
Stop. Say that again.
Yeah, over 20 million homes every single night in America are sitting vacant. Period. End of sentence. I mean,
you're saying that we have. So wait a minute. Let me get this straight. You're saying we have potentially 5 million more homes in the pipeline for foreclosure, and you're saying the real inventory sitting vacant is 20 million.
20 million vacant homes.
And you say so the real inventory is 20 million vacant homes plus 5 more million foreclosures in the pipeline?
Well, it could be those 5 million could be part of that overall 20 million.
Okay.
But again, it's hard to know because the banks, Greg, they're not foreclosing on their properties. They're releasing the inventory very slowly. Many times it's being released to these new big funds that are being created. For example, you have a fund like BlackRock, which has moved into Florida, moved into Atlanta. They're literally spending hundreds of millions of dollars acquiring rental properties. So there is a significant dive into housing and rental properties. And what's even more brazen is the fact that a lot of the players buying up the bad debt, a lot of the players buying up a lot of these properties are former executives of companies like Washington Mutual that fueled the bubble. Now they're coming in and they're forming new companies, the same executives, and they're buying back all the debt that they issued back in the day. And I mean, I think, anybody with half a clue knowing normal underwriting guidelines would have to know that those loans that were issued, not just by Washington Mutual, but a lot of these other banks that are no longer in existence, including the government and Fannie Mae, Freddie, were just absolutely irresponsible.
This is shocking news. And I guess this is why you say we haven't even scratched the surface of a bottom in the housing market. And what happens when interest rates go up? Can't these guys catch another, iron skillet with hot bacon grease in the face again? Am I wrong? If interest rates go back to 7%, don't they get killed again?
Yeah. On the cover of the housing of the Wall Street Journal just today was Ben Bernanke and the Federal Reserve saying that they're going to keep interest rates low through 2013. Well, there is no alternative, Greg. Raising interest rates right now would put even a worse amount, more pressure on housing. It would put pressure overall on the economy because, again, consumer-driven economy that they can't pay higher credit rates. They can't buy a new home if the rates aren't low. So for every point in interest rates going up, it's literally tens of thousands of dollars less in housing value. So that's why you're going to see low interest rates through 2013, through 2014, through 2015, I believe, until there's some kind of real dollar crisis or bond crisis. But in the meantime, we believe that that certain aspects of real estate is a good sector to be in because all the money's going into that sector. You just have to know what you're doing.
And you can't be caught on the wrong side of an adjustable rate mortgage. Absolutely
not. I mean, I think hopefully people have learned that adjustable rates, all these loans that were invented, not just for subprime, because they like to say subprime as well. Remember, credit-worthy borrowers, loans made to credit-worthy borrowers in the boom years were over $1 trillion in loans total. Out of those, more than 50% of them defaulted. So it wasn't just subprime in the $800 billion. It was credit-worthy borrowers that were part of this problem in housing.
And you're saying that by the Federal Reserve, this is the only game in town, putting their thumb on interest rates and forcing them down, suppressing, which is their stated goal, incidentally. That is their stated goal. You're saying that from your vantage point on the real estate end, you're saying, well, if they keep doing this in housing, then the dollar in the bond market is going to blow up. That's what a lot of people say, incidentally, that I talk to. Is that what you're saying?
Yeah, I mean, exactly. You know, they understand that they have to keep rates low, or it's going to completely cause a depression. The right thing to do would be raise interest rates, allow the depression to have, liquidate all the bad debt. You and I both know that will never happen. I mean, look at the arguments over this artificial crisis in the fiscal cliff that the politicians are using now. And we're talking less than $1 trillion in spending cuts over the next 10 years. I mean, it's minuscule when you talk about a country that has over $16.3 trillion in debt and increasing at a rapid exponential growth curve.
And spending $40 billion a month just on buying them stakes of bankers. I don't see how gold or silver or that kind of stuff can go down. But can't real estate go down if interest rates go up? People think, well, it'll go up with inflation. If rates go up, real estate will not go up, will it?
Well, no, I mean, it won't. I mean, obviously, all real estate is local, so it depends what kind of real estate it is. But at the same time, if I'm able to buy a piece of property that is rented, I really don't care about the value of it if it's producing me a monthly income that will likely rise along with other inflation. So, granted, it will be in dollars that I'm being paid, and that amount of dollars may be going down. But I'll tell you, just last month, I actually traded 3 months of rent for a couple gold coins. So that's another beauty about housing, is that you can barter. There's no written rules in real estate other than, of course, federal and state laws that you have to abide by. But when it comes to how you negotiate, how you buy, how you rent, anything goes.
You can accept chickens, cars, gold coins, silver, whatever you want.
Exactly. In housing, you have to think about it as a commodity, right? So, a commodity has an intrinsic value. What's somebody going to pay for a place for their family to live in that's safe, that's nice, whatever it may be, that particular individual wants? But it is a commodity like no other.
And
like I say, like all the others.
And last thing, you were telling me that you were selling blocks of houses, and some of them are going for $200-300 a piece in some areas. 200 houses, and they're buying them for $200 or $300. Is that right? Did I get that right?
Yeah, I mean, in many markets, you look at markets like Detroit, parts of Ohio that we're involved in. I mean, there's homes selling for $300, $400, $500, $600.
But you got to buy 200 of them or something.
Yeah, some of them have been hit really, really hard. Now, granted, you are able to buy at those types of prices when you buy in larger bulk. But I mean, again, I think that it's definitely an opportunity for investors. They have to know what they're doing. It's like any other asset class, Greg. Stocks, gold, silver, commodity, whatever it may be. I mean, there are different business cycles. You have to know what you're doing. But I mean, just like any of these other asset classes, there's a lot of money to be made in real estate right now. One of the biggest indicators that I like the most is follow the money. The money's pouring into housing right now. And, you wouldn't really know that unless you really know it like we do, because we're on the front lines of it.
Fabian Calvo, thenotehouse.us. Also, your very popular YouTube channel, which is Fabian for Liberty. Don't you have more than 2 million video views on there?
Yeah, something like that last time I counted. That's right.
Okay, Fabian Calvo, hey, thank you for giving us the real deal, the real information on USAWatchdog.com.
Thanks a lot, Greg.